Welcome to the Daily Brief, where I'll go over the highlights for how things look after Friday's session, September 2nd, and then we'll see how things look for Tuesday, September 6th. And please be reminded that the markets will be closed on Monday in observance of Labor Day. It ended up starting out kind of positive, but then things shifted over and became negative as the day went on. So right at the open, we did gap higher after the employment situation report came out. We opened up to R1 at 39.90, and then advanced all the way up to R2 at 4,013. As the day went on, selling, we hit upward resistance, and then there was no buying that came through. So then selling came into the market, took prices back below R1 and eventually to the unchanged level, fell down below the daily pivot, and fell all the way down to S1 at 39.24. Going into the close, we saw a little bit of a bounce and ended up closing right at S1. And we were down 1.07%. Volume has now switched back to being below average. The technicals are negative, and we're showing some short-term oversold conditions. We might be at some support on a trend line that we might get a bit of a bounce from. But the markets are just fixated on this inflation and interest rate scenario as far as growth concerns. We have the whole list of geopolitical concerns, Russia, Ukraine, things going on in China. They're doing lockdowns again in China in certain places. Earnings reports that are coming out, that's on a case-by-case basis. The debate going back and forth about a recession, and then any Fed speak specifically from Chairperson Powell. So what are some comments that we can make? This is kind of a narrative that had developed as the day went on, that there was this belief, and it's like the market really wants to latch onto this narrative that anytime we see a little bit of weakness, maybe inflation has topped out and the Fed can start to lower interest rates. That's what they're saying gave us the strength early in Friday's session. I don't necessarily believe that. We went up and we hit resistance, and we are in a down market. And so when that resistance could not be penetrated, sellers came in and took prices lower. But there was some other news where Gazprom, they're the ones that are dealing with the Nord Stream 1 pipeline. They shut it down to be maintenance, and now it's still shut down from my understanding, and that's freaking people out. And what's that going to do to Europe, especially with winter starting to come on? And what's that going to do to prices? And that's really adding to the really unstable political situation. And then also the G7 members, they agreed to impose a price cap on the exports of Russian oil. So that's not really helping things. You take the positive stuff that they were trying to grab onto earlier in the day, and then the negative stuff that developed when the selling came in, and it turned things pretty much negative. We have to keep asking this question: will prices drop to the June lows? We're still a ways away from that, but we want to at least keep that in the back of our mind. There is the trend line, and please watch the full length video if you want to see all the charts that I go through. That trend line is still holding up as prices are short-term oversold. All of the scenarios, our sector rotation, our positive setups, all of those are on hold for right now. And we have a few of them where we have to wonder, will new signals be generated? We've been working off some old signals that are starting to break down, and these signals are breaking down. Will they break down enough to generate some new signals? The 10 to the 2 and the 10 to the 5, they're still inverted. The 30 to the 5, which had been inverted, it's looking more normal now. Interest rates, the dollar, oil, they're having a tendency, a pretty strong tendency to go in the opposite direction of stocks. Not as strong as it was, but it's still fairly strong. Sentiment is turning more fearful, but it's far, far from extreme. We did have the employment situation report that came out that I'll talk about briefly here. And then factory orders declined 1% on a month-over-month basis. They expected it to be up 0.2%. So that's much weaker than expected. Our trend is negative, and it's starting to get stronger. The ADX is starting to turn up. Our bias, because we had the down day on Friday, that is still negative. Our momentum going back the last 2, 3, 4, 5 days, that continues to be negative as well. So how did the report show things? It was stronger than expected when you look at non-farm payrolls. They came out at 315,000. They expected it to be at 300,000. Non-farm private payrolls came out at 308,000. They expected it to be up 280,000. That was stronger than expected. Then the average hourly earnings, they were up 0.3%. That was a little weaker than expected because they expected those to be up 0.4%. The unemployment rate, which the market doesn't really pay all that much attention to because of how it's calculated and manipulated, it rose to 3.7%, where it had been at 3.5%. They expected that to be unchanged at 3.5%. And the labor participation rate jumped to 62.4, where it had been at 62.1 in the previous report. So what's our outlook then for Tuesday? The markets are closed on Monday. The technicals are negative and still giving us some short-term oversold indications. We have the IHS Market Services PMI coming out, not a real biggie, but the ISM non-manufacturing, that is a big one. And we had the manufacturing one come out this past week. Now we're going to get the non-manufacturing index. We have the whole list of geopolitical concerns with the Russia-Ukraine situation. And we have still those situations in China with the supply chain, but now they're starting to lock things down again in China. Inflation and interest rates are still really the focus of the US markets anyway. Oil as it's bouncing around, earnings as they're released, any kind of Fed speak that comes out, especially from Chairperson Powell. Japan, I'm not really addressing right now. And then the debate going back and forth about the recession. So what are our scenarios? We have to go with the negative scenario right now for all the reasons I just mentioned. And our technicals are negative, but we're at a trend line that is so far holding up and we're short-term oversold. So getting into short positions might be kind of risky right now. We might see some kind of a bounce. We can't go with an up scenario because the technicals are so negative. Will it get some support from that trend line? Our scenarios, our rotation, and our setups, those are all on hold right now. The technicals, they're not giving us really any indication that the market's going to go up. We're dropping below moving averages. We're dropping below pivots and retracement levels. We're dropping below support. So that's negative overall. We can't really say that we're sideways because the ADX is above 20 and it's negative with the red line on top. So our conclusion, the S&P is negative. Big surprise. Short-term negative and oversold. Intermediate term negative and could be becoming more oversold if we see more follow-through weakness. Long-term, we continue to be negative. So thank you. Please tune in to the full-length video to look at the charts and more analysis and commentary that I provide. Have a wonderful, relaxing 3-day weekend, and I'll talk to you in the weekly video and in the intermarket analysis video.